Hold on. Nigeria's inflation just dropped to 16%. This isn't just good news, it might be a game changer. The big headline: the National Bureau of Statistics, NBS, has reported that Nigeria's headline inflation rate fell to 16.05% in October 2025. This marks the country's seventh consecutive monthly decline in inflation, after hitting peaks above 30%. It's a dramatic turnaround from late 2024 when inflation soared into the 30+% range. Why the drop is so important? Relief for consumers. A drop from 20-30% inflation to 16% means that the cost of living may be easing somewhat, especially for food, fuel, and staples. Households could finally get some breathing room. Signal to policymakers and investors. This decline suggests the government's and central banks' policies, monetary tightening, exchange rate reforms, subsidy removal, may be bearing fruit. It can boost investor confidence and give the central bank more flexibility. Monetary policy implications. With inflation trending down, the Central Bank of Nigeria, CBN, may be able to cut interest rates, stimulate growth, and ease credit conditions for businesses. Analysts expect further easing. Economic diversification and growth path correction. Lower inflation can help stabilize the Naira, reduce import cost pressures, and support local production. This can contribute to the broader goal of shifting Nigeria away from volatility and dependency on imports. What's driving the decline? Food inflation moderation. One of the largest components of CPI, food and beverages inflation has slowed with improved supply, seasonal harvests, and less transport disruption. Methodological revision and rebasing. The NBS updated base years and weighting in the CPI, which has the effect of lowering reported rates somewhat, though the trend remains real. Policy adjustments. Earlier reforms, such as fuel subsidy removal, exchange rate adjustments, and increased market pricing mechanisms, may be starting to stabilize inflationary expectations. Supply chain improvements. Reduction in major supply disruptions, improved agricultural output, and better logistics could be reducing cost pass-through in key sectors. Are there risks and caveats? Absolutely. Methodology versus reality. While 16% looks good compared to 30%, some argue that the base year change and basket reweighting may hide underlying inflation pressures. The lived experience of many Nigerians may still be tougher. External shocks. Nigeria remains exposed to global oil price swings, currency shocks, food price spikes, especially imports, and local supply chain disruption, for example, due to insecurity. Any of these could reverse the decline quickly. Core versus headline inflation. Headline inflation falling is excellent, but if core inflation, excluding volatile food and fuel, remains high, then there's still pressure on business costs, wages, and interest rates. Growth trade-offs. Lower inflation is great, but if achieved by slowing the economy sharply, then jobs, incomes, and growth suffer. Policymakers must balance price stability with growth support. Implementation lock-ins. Hot policy tools, tight rates, subsidy removals, structural reforms can only last so long. If reforms stall or fiscal deficits widen, the inflation path may tick upward again. What to watch next? November and December figures. Will inflation keep dropping into the high teens or 10 to 15% range? Core inflation data. How much of the drop is in food/fuel versus the more persistent categories? Interest rate decisions. Will the CBN cut rates further? And how will financial markets respond? Naira and FX developments. A stabilizing currency supports price stability. A sudden devaluation could spike inflation. Supply chain indicators. Food output, transport costs, energy prices, all likely to impact inflation. Consumer and business sentiment. Are households and firms seeing relief in real terms: spending, investment, and credit? What it means for Nigerians. short-term relief. Households may feel less pressure in some spending categories, food, transport, utilities, if the trend holds. Credit and borrowing. If inflation falls and interest rates are cut, business loans may become cheaper, boosting enterprise and possibly jobs. Cost of living improvement. While not dramatic yet, the slide towards 16% suggests costs may stabilize rather than keep quadrupling. Hope and confidence rebuild. A visible inflation drop can restore faith in policy, encourage investment, and reduce fear of runaway prices. Final reflection. The 16.05% inflation figure isn't just a statistic, it's a signal. It tells Nigerians, maybe the worst is behind us. It tells markets, yes, policy is working, but vigilance remains essential. It tells reformers, you're on the right path, but execution needs to be sustained. However, we mustn't get carried away. The world is unstable. Prices can spike again. Reforms can stall. The lived reality of many Nigerians may still feel painful. If Nigeria plays this right, consolidates the decline, supports growth, stabilizes the Naira, and channels relief to households, then today's announcement could mark the beginning of a phase of economic recovery, not just a blip. But if complacency sets in and global shocks arrive, the drop to 16% might end up being just a temporary breather. The challenge now isn't just reducing inflation, it's locking in the gains. And for millions of Nigerians watching costs, incomes, and jobs, that makes all the difference.
Thanks for watching. If you enjoyed this update and want to stay informed with fast, reliable news, don't forget to subscribe to Newsflash 360. Hit the notification bell so you never miss a story. Your next headline is just seconds away.